In this video, I'm showing you the 10 best cash flow markets for real estate investors right now in Q4 2023 and going into 2024. So let's get right into it. Coming in at number 10 is Montgomery, Alabama, just about halfway between Birmingham and Mobile by way of I-65. Montgomery has a population of 386,000, a median home price of just under $199,000, and a gross rent ratio of 9.1. Now, you're probably wondering where this list comes from, but first, I should probably explain what a gross rent ratio is. A lot of real estate investors are familiar with the 1% rule, a rule of thumb which states that if a property generates a monthly rent of 1% of the purchase price, it's a good deal. For example, if you can collect $2,000 in monthly rent from a property that costs $200,000, you're hitting the 1% rule right on the head. And gross rent ratio is the same concept, but we look at gross rent for the whole year, meaning 12 months. So the equivalent of the 1% rule is a gross rent ratio of 12. A higher gross rent ratio means more rental income for every dollar of property you purchase. So of course, number 9 on our list, Beaumont, Port Arthur, Texas, ekes out Montgomery by a hair with a gross rent ratio of 9.2. Beaumont, Port Arthur is also slightly larger with a population of 397,000, and its homes are slightly less expensive with a median home price just under $181,000. These are both positives. Larger markets tend to be more stable than smaller ones, and a slightly lower median home price makes buying properties a little more feasible. Speaking of feasible, while the 1% rule, i.e. a gross rent ratio of 12, used to be something of a litmus test, nowadays it's more of an aspirational benchmark. As this map from HousingAlerts shows us, on a statewide level, most states see gross rent ratios in the 5s, 6s, and 7s. Only 2 states, West Virginia and Mississippi, have a statewide gross rent ratio north of 8. Note on this map that green and teal represent neutral scores. As gross rent ratios get lower, the color moves to blue and pink. If we had any states with stronger gross rent ratios, we'd be seeing some yellow, orange, and red. Which we do see, by the way, if we jump back even just 2 years to 2021. West Virginia and Mississippi turn yellow with gross rent ratios north of 10. The Sun Belt and Midwest are solidly green, and there's no pink on the map at all. That's what 2 years of home prices growing faster than rents will do. Good cash flow is much harder to come by, but it's out there. Like number 8 on our list, Binghamton, New York, a town of 247,000 people, about 3 hours northwest of New York City. The median home price is $169,000, and the gross rent ratio ties Beaumont, Port Arthur at 9.2. Now, you'll notice that all of the markets on our top 10 list have gross rent ratios that stand out compared to the statewide averages, and that's to be expected. When we look at the national map at the metro level, we still see a lot of blue and pink, but we also see a number of metros that are green, yellow, and even red. We have some yellow in New York State, in West Virginia, and in Texas, which has several metros scoring a gross rent ratio north of 10. Wichita Falls, Abilene, Corpus Christi, and McAllen. The best performing metro on the map in terms of gross rent ratio, this one bright red rectangle here, is Danville, Illinois, with a shockingly good gross rent ratio of 13.6. But, believe it or not, Danville did not make our list of the top 10. I'll explain why right after revealing number 7 on the list, Huntington-Ashland, a metro area that sits on the borders of West Virginia, Kentucky, and Ohio. This metro area has a population just under 360,000, a very affordable median home price just under $154,000, and a gross rent ratio of 9.3. So what is this list? And how did I make it? And why doesn't it include Danville, Illinois? This list was made at my new favorite website, HousingAlerts.com, which is a collection of housing data, interactive maps, analysis tools, and proprietary analysis that brings a real estate investor's game to the next level. I made this list in the Precision Market Finder, a new tool to the Housing Alerts site. This tool lets you filter and sort real estate markets by a ton of different metrics, so you can hunt through markets at the state, metro, county, or even zip code level to find exactly the markets that meet your investment criteria. When you first open the Precision Market Finder, by default, the hot market score is already loaded. So we get a list of all 404 metro areas in order of their hot market score, which is a proprietary analysis by Housing Alerts scoring each market on its vibrancy and likelihood of appreciation. We'll circle back to the hot market score and why it's so important. Right now, let's pop back to our top 10 list to reveal number 6, El Paso, Texas. This is our first big city on the list with a population of just under 869,000, a median home price of $197,000, and a gross rent ratio of 9.5. That means you can expect a median El Paso home to rent for $1,560 per month. Now, once you account for your mortgage, taxes, insurance, and expenses, you're not left with much of a profit. But remember, we're talking about median numbers here, not the entirety of the market. The goal here is to pick a metro with a high median gross rent ratio, then find properties in that metro that perform better than the median. Let me show you what I mean. This is Housing Alerts' gross rent ratio map at the zip code level. And right now we're looking at El Paso. The metro-wide median is 9.5, but as you can see, some zip codes have ratios well above that, all the way up to 13.4 and 14.7. And some zip codes have gross rent ratios south of 9.5. Knowing a market's strongest zip codes is crucial, no matter whether you're buying to hold or wholesaling or even flipping properties. You don't want to waste your time or energy in the weaker neighborhoods of any market. Back to our list of the best cash flow markets in America, where number 5 is Detroit, Michigan. The Detroit metro area is the largest market on our list, with a population of 1,793,000. The median home price in Detroit is $192,000, and the gross rent ratio is 9.6. This is the last single-digit gross rent ratio on the list, and when we get to the number 4 spot, we'll have our first double-digit gross rent ratio. But first, let me show you how I made this list. Using Housing Alerts Precision Market Finder, I created and defined a few filters to narrow the complete list of 404 metros down to just 10, the top 10 best cash flowing metros in the US. The hot market score is a default variable, and I'm going to add to that population. Now, I'm not going to limit the population, at least not through this filter. Adding population allows me to see each market's population, which is data I want to know when assessing markets. Next, I'm going to select median home value, and this time, I'm going to use this variable as a filter. The national median home value is currently around $370,000, so I'm going to set the upper limit of this filter to $370,000. With the market being as volatile as it is right now, with rates so high and the fear of a recession looming, I think it's prudent to stick to markets at or below the national median home price. You may disagree, but this is my top 10 list of cash flowing markets, and thanks to Housing Alerts, I can make a list tailored to my preferences and concerns. Lastly, we'll add the gross rent ratio variable, and I know from some trial and error that we want to limit our search to metros with a gross rent ratio of 9 or better. Now, when I scroll down to our list of markets, we actually have a list of 28 metros, with Danville sitting at the top. Here's the thing though, I really don't like investing in small markets. Big markets, like my hometown market of Los Angeles, have myriad employers, job centers, government offices, educational institutions, airports, sports teams, and with all of those come a lot of stability. For example, in Los Angeles, you don't need to worry about buying units near employment because employment is everywhere. The whole city is an employment center. In smaller markets, you have fewer rent drivers, not in variety, but in terms of quantity. A small market might have one university, or one major employer, or one significant attraction. And there's nothing wrong with investing in smaller markets, but you have to understand the market well. And for this list of top 10 cash flowing markets, I wanted to make sure that any market on this list would be acceptable to me or you without having to do a ton of research on each market. For example, number 4 on the list is Charleston, West Virginia. Charleston has a decent size at nearly 259,000 people, a very attractive median home price of $139,000, and a pretty killer gross rent ratio of 10.1. Now, I don't know anything about Charleston, but with a population of 259,000, I'm confident that this metro has enough diversity of commerce and attractions to provide the stability I want. And a quick glance at Charleston's Wikipedia page confirms that. Charleston is the capital of West Virginia, so you have city, county, and state governments there. You've got the University of Charleston, West Virginia State University, and satellite campuses for West Virginia University and Marshall University. Businesses headquartered in Charleston range from Appalachian Power to United Bank, and Yeager Airport in Charleston services United, Delta, and American flights. So in order to limit our top 10 list to markets sizable enough for my comfort, I clicked this box here, which limits the list to markets with populations over 200,000. And that produces our list of 10. Number 3 of which is Corpus Christi, Texas, with a population just under 422,000, a median home price of $204,000, and a gross rent ratio of 10.5. Now we're down to the top 2 best cash flow markets in America, and this is where things get interesting because this is where the hot market score comes back into play. Like I said, Housing Alerts contains a massive data set of housing indicators, and it provides tools like the Precision Market Finder, and it also provides its own analysis of the data it collects. And what makes Housing Alerts unique is that its analysis is technical analysis, not fundamental analysis. Digging into what this means exactly is a whole video unto itself, and I'll be making it shortly. But Housing Alerts provides, I think, the only real estate market analysis based on technical analysis anywhere. And here's what that looks like. Number 2 on our list of best cash flowing markets is McAllen, Texas, with a gross rent ratio of 10.5. And number 1 on the list is Brownsville, Texas, with a really impressive gross rent ratio of 11.2. But now let's reveal the hot market score as tabulated by Housing Alerts, utilizing, and this is key, its proprietary technical analysis. McAllen scores a 67, whereas Brownsville scores a 49. What does this mean? According to Housing Alerts analysis, McAllen is a hotter market, meaning the housing market is more vibrant and there's currently a higher likelihood of appreciation. To see what that actually looks like, let's compare McAllen with number 3 on the list, Corpus Christi. Both markets have a gross rent ratio of 10.5, but their hot market scores are worlds apart. Digging into each market's summary report, we can look at each market's wealth phase chart, one of my favorite Housing Alerts tools. What we're looking at here is McAllen's inflation-adjusted annual home price appreciation. This black line is 0%, or flat appreciation. When the blue line is above the black line, home prices are going up. When the blue line is below the black line, home prices are going down. And these green zones are what Housing Alerts calls wealth phases. The time to get into a new market is when a wealth phase starts, and the time to get out is when a wealth phase ends. We see from McAllen that price appreciation really climbed during the pandemic, then fell off in the second half of 2022, but is now on the rise again. McAllen is still in a wealth phase. This isn't the only reason it scores a hot market score of 67, but this is what you would expect of a high-scoring metro. Corpus Christi, on the other hand, has seen price appreciation plummeting since the post-pandemic peak. In fact, you can see from this green dashed line that Housing Alerts just called the end of Corpus Christi's recent wealth phase. Again, this isn't the only reason Corpus Christi has a hot market score of just 14, but this is what you should expect to see with such a low-scoring metro. Housing Alerts is a sick website for any real estate investor, and you can sign up for a free state-level account to explore the data, tools, and analysis for yourself. Please use the link in the description if you're interested, and yes, this is an affiliate link, but I wouldn't be making a video featuring Housing Alerts if I didn't use it myself and love it. Subscribe for more real-world, real data, real estate analysis videos like this one.